this fractional reserve banking system, it's not the devil that everybody thinks it is. It's just fragile.
In today's video, Mark Yusko, the founder, CEO and CIO of Morgan Creek Capital Management, discussed about the Fed raising interest rates and impact on all markets including crypto, the crypto bear market, and if we've hit the bottom on Bitcoin.
$625,000 base case.
Yeah.
Why not?
Why not? You know, and again, apologies for the background today. I'm working remote, but look, the math of Bitcoin is pretty easy, right? We take the total market cap that we think is achievable. We divide by the number of coins that are still in circulation, and you get a number. And everybody fixates on that number. But I always think it's the wrong number, right? Because it's in our currency. So you and I both know one Bitcoin is one Bitcoin. It has been the entire time. That's what we're trying to move toward, is a world where Bitcoin is the unit of measure. What we're talking about here is dollars per Bitcoin. And that price that everybody fixates on isn't so much Bitcoin getting better. It's actually our money, right, the dollar, getting worse. It's, like trying to buy a cup of coffee that, used to be a quarter, now is $5 or $6. It's the same cup of coffee. It does the same thing. It delivers the same amount of caffeine, unless you put whatever Kathy's putting in hers. So anyway, the math of just pick a number, 500K, 600K. Let's do that math together. Where does that even come from? Well, if you have a base case that the market cap of Bitcoin should roughly equal gold's market cap. Okay, yeah. A reasonable assumption. If we say that Bitcoin is digital gold and it plays the role of base money, right? Money, as we know it, is really a small thing. It's gold. And Mark, what do you mean? I use cash. No, that's debt. That's a currency, but it's not money. Money is an asset that exists in the absence of a liability. The only thing in the world that does that for 5,000 years is gold. Now people have dabbled with other stuff, but ultimately all the other stuff that we think of as money is backed by debt. It's currency. And that's why it ultimately devalues and ultimately inflates away, and why in the history of the world, there have been 775 paper currencies. 3/4 of them no longer exist. I mean, they literally went away. And the same is happening in real time to the dollar, which is why Larry Fink, like not exactly, Joe from some, Twitter handle. We're talking one of the most powerful people in the world, manages, he's in charge of a company that manages close to 10 trillion with a T dollars, said that you should put some money in Bitcoin, in my ETF, of course, that will protect you from devaluation of the currency. I mean, he actually said it. And so this is a long answer, Scott, to how do you get to 625?
I mean, that's just 20x market cap from here, right? So gold is 20x our market cap. Easy, 600, done.
Exactly. No, that's it. And that's all it is. And now the one adjustment I make is the total market cap of gold is 11 trillion. Okay. Total market cap. And, we're about $500 billion in Bitcoin. So total market cap, actually, were you higher than that? What is?
I think it's 600 or 700. I've got it here.
700.
But yeah, I mean, somewhere in the ballpark. I can get it. Yeah, the whole total now is at 1.2. So we've grown.
Yeah,
it's 581 billion. Yeah.
Okay, so 600
Bitcoin.
So let's round gold to 12, because it probably is, and your 20x is right.
20x.
But here's the thing: half of that gold isn't money; it's jewelry. and chalices and, gold leaf and stuff that isn't really used as a monetary base. So that half is 6 trillion. That's a 10x from here. Current price of 30, 10x is 300K. Okay.
Take it.
300K to me is so easy. We don't even have to debate, because the idea of Bitcoin being better than gold as a store of value, as a unit of account, as more portable, like I say all the time, if I had a bar of gold, which maybe at my other house I do, but if I had a bar of gold and I wanted to break it in half and send you half, I'm not strong enough to break the bar of gold, first of all. Second, I couldn't stuff it in the computer to send to you. I want to send you some Bitcoin. I punch a couple buttons and you got Bitcoin.
We're done.
So that's a superior store of value and medium of exchange. So I believe Bitcoin gold equivalence is a no-brainer. Now, when? Tomorrow? Next day? I don't really care. Sometime in the future, that's easy. So that's that 300K number.
So she makes the different case, obviously. She believes it's because banks will fail. But what I find interesting is that she has a case for both deflation and inflation here that's bullish for Bitcoin.
Yeah, look, and I actually agree with what she's saying, in the sense that we have, for 800 years-ish, been ruled by this system. And I used to tell the story, Scott. It's funny. I just got back from a vacation. I took a long vacation for the first time in a long time, and it was awesome. We went to Spain and Portugal. And for years, I had talked about, and I think even with you on the show, I've talked about, the Medicis, 800 plus years ago, invented fractional reserve banking. And they borrowed, AKA stole, as Picasso said, good artists borrow, great artists steal. They stole from some monks this idea. Now, I didn't know until a couple weeks ago, when I was in Portugal, that those monks were the Knights Templar. That these Portuguese monks, the Order of Christ, the Knights Templar, the cross, that, here's the crazy thing, Scott. Once you hear this story, everywhere you look, there's the cross.
Oh, everywhere. That happened to me after I watched Indiana Jones and the Last Crusade. But yeah, go ahead.
Yeah, but every monument, every little sidewalk, little inscription, every Portuguese flag, everything, like every football coat of arms, like Barcelona's coat of arms has the Order of Christ right there. So Knights Templar everywhere. But this fractional reserve banking system, it's not the devil that everybody thinks it is. It's just fragile, and it's subject to abuse. And I've used the example all the time. In the old days, I lent you money. I wrote down in my ledger. I kept the ledger because I was the rich guy. You needed the money. And I wrote down, you owe me $100. You come back to pay me $100. I've tampered with my ledger. You show up with your 110 to pay me back. And I'm like, oh, but Scott, it says right here, you owe me 200. And you had no recourse because there was no other ledger. So the Medicis, borrowing the Knights Templar, said, okay, Scott, you keep a ledger. Mark, you keep a ledger. And we, the benevolent Medicis, for a small fee, will arbitrate that the ledgers match. But here's the thing. They're corruptible. And I'm a corrupt guy. So I go to the Medicis, and I say, you know what? Scott owes me 100, but I'm going to change it to 200, and I'll give you half. And they're like, done. So you come back to pay me 100, and the book says 200, and you're like, hey, guys, it's 100. And they're like, Scott, you must have written it down wrong. I'm sorry. And so you have to pay 200. And so for years, the system has been corrupted. And we've seen lots of examples, from the spoofing and the fines. My favorite stat on that is the fines paid by the global banks. The fines, not the malfeasance, not the money laundering, not the fines that they've admitted to and paid equals the market cap of Bitcoin.
Yeah.
I mean, that's an amazing stat. And that's a little outdated because I think it's only 500 billion and now we're up to 700 billion. But still, $500 billion is a lot of money to pay for malfeasance. And so now we have this triple entry accounting system, and that Kathy discusses, this decentralized system where we don't have to rely on the Medicis or the Morgans or the Rothschilds or anybody else. It's just you and me and this global decentralized network that is immutable and permanent, that we don't have to debate. and we don't need anybody else. Like, if I want to send you money right now, you have to have a bank account. I have to have a bank account. We pay a fee, wire transfer fee or whatever. But that's antiquated technology. That's an old system. In the new world, this is the other cool thing I learned. In 1492, there was no new world. Right? Where we're sitting today was forest and trees and not a lot of stuff. And Queen Isabella, the first venture capitalist, gave Christopher Columbus and Vasco da Gama, he went to India, and Christopher went, thinking he was going to India, went to the New World. Long story short, she was the first venture capitalist. Why? Because she took 20% of what they carried back, carried interest. I love that. And, the Spanish and the Portuguese were rich for a long time. They were the center of the universe. The Portuguese was the first world reserve currency, then the Spanish when they took over. And it's like, how could that happen? Well, it's because there was nothing here. There was nothing. And something I never thought about. This is a kind of cool stat or cool little thing. The horse, the cow, the pig, the chicken, all of them, not endemic to North and South America. The potato, not from Ireland. The tomato, not from Italy. Those are from South America and all the other stuff. And it all came through Seville, Spain in the late 1400s.